A fairly choppy day of trade and wasn't the best of closes, given that we did end very flat after those downgrades, and by the end of the day the market breadth, which was even, was veering in favor of the losing side. For the broader markets, also not a great show. The mid and the small cap index were in the red by just about 0.3%. Index losers came in the form of the entire auto pack as well as the metals pack. In fact, those two held up, so the rate sensitives did fairly well for themselves in today's session. Though on the losing side, you had technology as well as real estate stocks which lost out. M&M was one of your big gainers, also BPCL, Hindalco as well as Unilever did fairly well for themselves. To some of the big losers then, and Bharti Airtel, that came out with its 10th straight quarter of a profit decline on account of cutthroat competition which squeezed its margins. The profits were lower by 24% at 762 crore rupees and revenues were higher by just about 3%. The stock price too was hammered in trade today. It touched its lowest level in the last 2 months. The management says that TRAI guidelines in fact have had a negative impact on the financials.
The TRAI guidelines around consumer protection, which came into force in March this year, had a full quarter impact on our financials. These regulations have been restricting our ability to offer bundle packages to our customers and also put a cap on the processing fee that we can charge vis-a-vis the free market prevailing prices in a very, very intensive multi-operator environment. Flexibilities in pricing, such as processing fee, are extremely vital to the industry. The realizations are far lower than what we expect globally. The industry is appealing to the regulator to remove this cap and to ensure that there's a free playing field as far as pricing is concerned.
Let's break down the numbers then in further detail. We've got Sunita Nagpal who joins in from New Delhi with the details. Sunita, pretty disappointing.
Absolutely, they were pretty disappointing. If you look at the revenue side, was marginally lower, largely because the volume growth was not as good as we were expecting. RPM decline was far sharper at 2.5% than what we had anticipated. But what really shocked the market was the 310 basis point decline in EBITDA margins. This decline is largely because you saw net operating expenses going up sharply by 9% in this quarter. Also, the sales and marketing costs were higher by 22% in this quarter. So both these factors basically led to your EBITDA margin being lower than 300 basis points. So that's basically where the disconnect came from where the expectations of analysts were. And also the fact that in the management call, the company said they do not rule out further deterioration in EBITDA margins because the competition is very, very high. All those telcos who have lost their licenses which have been cancelled are almost giving free minutes. So the pressure is expected to continue in future. So this fact led to the stock really cracking out when the con call was going on for the Bharti stock. But going forward, analysts are of the view that the regulatory news flow will be what will be guiding the stock price movement. And also, if the margins continue to squeeze, there could be a possible re-rating for a lower PE rating for Bharti going forward. But at the moment, the Q1 numbers were very, very disappointing and margins left a lot more to be desired.
Thanks very much, Sunita, for giving us the details on Bharti Airtel. We also had a word with Bhavesh Gandhi, research analyst at IIFL, who retained a buy call on the counter, but says that the tough regulatory environment will continue to remain an overhang on telecom companies.
We would retain our buy record, but the target price could possibly be reduced factoring in this quarter numbers and the continued uncertainty that we have on the auctions as well as the high reserve price. So I think yes, regulatory environment will continue to be a big hangover on all the telecom stocks right now, both Bharti, Idea and Arcom. We could possibly cut our target price for the stock, but broadly would stick with our buy record.
And almost after a year after it's announced the possibility of listing its star unit, Bharti Airtel today said that a committee of the board of directors will consider a public offer of Bharti Infratel, which owns 33,000 towers in India. Let's go straight across to Gauri Dwivedi for more details on this. Gauri.
One, telecom companies have been trying to monetize their tower assets for a while now, and in fact it's been over a year since Bharti Airtel actually said that they would want to monetize their tower assets. They have 33,000 towers across the country, and more importantly, Bharti Infratel also owns 42% in Indus Towers, that of course the largest tower company, independent, that's being run. It has over 1.1 lakh towers that are operational, and 42% of that is actually owned by Infratel. And what the company really said today was that the committee of board of directors will be appointed that will look at the possibility of a stake sale of about 10% in Infratel. And remember, this is something that's important because Bharti Airtel has over $12 billion of debt on its books, and there has to be a way of raising cash. Monetizing tower assets is something it has been looking at for a while now. Earlier there was talk that Indus Towers could be the one that could actually hit the IPO route, but it's not. It's going to be Infratel that will really be evaluating the possibility of an IPO. The company also categorically said it's not final whether or not an IPO will happen or not. It's just a possibility that is being evaluated. As I pointed out, this is something that the company has been toying with this idea for over a year now. It is very much a possibility that the IPO may not happen immediately in the next few quarters.
Many thanks, Gauri, for giving us all of those details. Let's also take in to check some results which are coming out on your screen right now. And on the face of it, it's a pretty disappointing set of numbers for Tata Power. While the ET Now poll was expecting the profits to be lower by just about 1% at 415 crores, this has come in way lower. So the consolidated profit figure is giving a reading of 146 crore rupees. We wait by for the sales figure also. 7,150 is what the ET Now poll had pegged. This time around, the losses from the Mundra UMPP are certainly going to eat into the bottom line figure, which is why you're probably seeing such a low number. Improved blending of coal is likely to boost the margin picture. We're expecting 22.4%. That's the only figure we have with us at hand, 146 crores. To some of the other earnings for today, ABB put out its numbers, a good set. The profits were at 51.6 crores versus 38.7. The top line also grew, so it was at 1,858 crore rupees. The counter seeing a good reaction. Oil India, though, disappointed. The net profit was higher by just about 9.7%, 933 crores. You had the top line, which came in at 2,333 crores versus 2,175. A very quiet close. GVK Power, if you dissect those numbers from every angle, it was a big disappointment. This time around, it was a loss of 64 crore rupees versus a profit of 58 crores. It's not like we were going in with very high expectations, but the interest costs that largely ate into the bottom line. Sales were higher by 33% and EBITDA margins came in lower at 23% versus 22.8%. But Mahindra & Mahindra also put out its first quarter performance that beat street estimates. The net sales were up 39% at 9,367 crores, while profits shot up a good 20%. But we must point out that these earnings are not comparable on a year-on-year basis, given that M&M is merged with has merged Mahindra Auto with itself. Let's take it straight to Yatin Mota, who joins in with a detailed analysis of the numbers. Yatin.
Well, Mahindra & Mahindra clearly surprised most of the analysts on the operating margin front. Their operating margins almost were up 100 basis points versus the estimates, which was at close to 11.8%. The revenues came in at close to 9,367 crores. Also, if you see about the profits, that was almost well above 100 crores versus the estimates, which came in at close to 726 crores. Do remember, Mahindra & Mahindra's quarterly numbers are not comparable on a year-on-year basis because of the merger of the entity called Mahindra Automotive. So, that numbers have not been comparable on a year-on-year basis. But if you see really the operating performance, that has been great, largely led because of higher diesel car sales and the utility vehicle sales, which have been driving the revenues as well as the operating margins for the company. But as far as the management commentary was concerned, that was, a bit cautious. Management clearly indicating that the drought-like situation which is there in the country, that could pose a significant threat as far as demand for tractors as well as the other vehicles were concerned. Also, slowing US economy and Chinese economy could pose a threat as far as the global demand and export demand is concerned. So clearly management sounding a bit cautious, but overall the numbers have surprised, especially on the operating performance side.
Okay, thanks very much for those details, Yatin. But to some of the other stocks in news then today, and after scathing reports on Reliance Communications, DLF and Kingfisher, Canadian research firm Veritas today lambasted the India Bull stocks for bilking minority investors in order to benefit the promoters. That caused all of the Indiabulls stocks to crack in trade today, but they did manage to recover quite a bit by the day's close. Let's take it straight to Nisha Podar, who joins in with the details of what exactly the report alleges and what the reaction is from the management to the same. Nisha.
Veritas report today came out with scathing reviews and some very serious charges against the entire Indiabulls group. In fact, they did say and alleged that the Indiabulls group management or the three companies which are listed are working in favor and the benefit of the promoters at the expense of the minority shareholders. There are three instances which are mentioned for the three listed companies, which are Indiabulls Real Estate, Indiabulls Financial Services and Indiabulls Power. So first, with Indiabulls Real Estate, the research report did say that some of the promoters closely held companies are probably the ones where the funds from the company is redirected, and that those closely held companies do not have any employee costs and probably no operations of their own. The second one is against Indiabulls Power, and questions have been raised about the fair valuation and the valuation at which the merger between Indiabulls Infrastructure as well as Indiabulls Power had been done some time back. And the third company in question, Indiabulls Financial Services, for that employee welfare trust and the money given to that particular trust is something that has been questioned as well. So very serious charges that have been put against all the three companies, and the stocks did crack and showed a knee-jerk reaction in the beginning of the trading day today. But as far as Indiabulls Group is concerned, they have sent long clarificatory notes explaining all the three instances and have rubbished this entire report and have said that these are bogus claims which have been made by Veritas. Nonetheless, on the stock market, it was a knee-jerk reaction. The stocks did recover by the end of the trading day.
They certainly did. Many thanks, Nisha, for putting all of that into perspective. Moving on then to some of the divestment candidates, they shot up in trade today. The likes of an MMTC, STC, as well as a Hindustan Copper and Neyveli Lignite. As the divestment SECI said that they are likely to meet the divestment target, it won't be a problem, and they are mulling Neyveli Lignite, MMTC, as well as divestment in all of these companies. Away from that, then, Kingfisher Airlines, that counter hit a new low. There was the news that they have cancelled around 22 of their flights from Delhi and Mumbai on account of the pilots and engineers who have stayed away from work, protesting against non-payment of salaries. JP Infra, on the other hand, that one got a good fillip, as there is the news that the Yamuna Expressway will open on the 9th of August. Remember, the counter has been rallying on the back of this news for quite some time now. In the metals pack, Hindalco, JSPL, Tata Steel, from the word go, all of these counters gave a good boost to the index, and it's largely the rub-off impact that you're seeing from the sharp rise in metal stocks globally. Remember, the base metal prices have risen on the LME between 1 to 1.5%. But all in all, a very tempered day of trade for the benchmarks.